There's potentially never been a better time to be invested in the crypto or token spaces than right now. Yes, folks, leading up to the 2024 halving are expectations of a relatively muted price action from Bitcoin, Ethereum, and the stablecoin market. And although interest rates are still relatively high and liquidity is still relatively low, there are signs telling us from history that this time around could be very similar to previous halving events we saw in 2016 and 2020. For those that don't know, a halving event is essentially when the supply of Bitcoin is cut in half, which means the reward for mining Bitcoin from developers and other institutions is essentially doubled. And although there is no direct correlation in the price action of Bitcoin itself and the halving event, this event is known to create a lot of optimism and positive price action for the crypto industry, especially in the backdrop of regulatory clarity, ETFs being launched, and obviously potentially interest rate cuts in 2024. In my opinion, folks, all these factors are coming together to develop a really strong potential bull thesis for Bitcoin price action, companies like Coinbase, and the overall industry itself, which has been obviously relatively muted so far in 2023. A lot of small banks have gone under, and the SEC has decided to go all in against its fight with the top corporations. And as we've seen over the past couple of months, the SEC is clearly starting to lose that very, very poor battle. And especially in the backdrop of Europe having commissioned its very first spot Bitcoin trading ETF, the SEC is under immense pressure to follow suit with what global authorities are doing and allow for better clarity from US corporations and enable for Bitcoin ETFs to be traded from the companies like BlackRock and Grayscale. And from a fundamental perspective, it's going to be these wins from these corporations that's really going to help the industry grow up from the NFT and yacht parties that we've seen of times in the past. Instead, crypto is potentially going to be seen as an asset that investors can take exposure to who want to be a part of the decentralization of finance as well as innovative blockchain programs. Like I believe time and time again, the SEC's rejection of these proposals is simply a mild negative and a delay at most to the inevitable commissioning of spot Bitcoin trading. A BlackRock or Grayscale Bitcoin ETF would open the market to both institutional and retail investors who likely have never used a digital wallet in their entire lifetime. This truly is potentially a revolutionary moment for the Bitcoin and crypto industries, although chances are the reaction from the news might not be as positive as many people have made it out, simply because of the hyped up expectations. But just like in equity markets, a news catalyst will always do good for price action, especially if it comes in the midst of good technical and fundamental backing. And as for the former, the data looks extremely good. As you can see, the 50-day moving average for Bitcoin's price action here in August of 2023 is below price action and has been so for the past month and a half. Now, although there's nothing guaranteed from a technical perspective to get an idea of where price will go, it does give us a good idea of where price might go. And as you can see, every single time we have seen the 50-day moving average start pointing up and sloping up in the midst of a massive sell-off, we have always seen a very strong recovery followed suit, although pullbacks are still extremely common. And this right here really is the story of Bitcoin and other assets in the stock market. You really need a shock catalyst for price action to change trend. And in 2022, it was the Fed's drastic interest rate hikes. And so far, unless we get another pandemic in the form of COVID-20, there really is no negative catalyst on the horizon, which means that although pullbacks are going to be common in the volatile crypto markets, generally speaking, the price action has a good chance of continuing an uptrend. And this sideways action that we've seen in Bitcoin's price since May is essentially a sideways consolidation in preparation of a broader move up, which, as we all know, will come at a time when nobody expects it. Because, as you can see by this chart, it's become common practice for the rolling 7-day volatility of the crypto market to spike suddenly at the time of a news event, whether it be the SEC complaint against Grayscale and Coinbase, the XRP ruling, or the banking crisis, as well as the Wells notice from March of this year. But as you can clearly see, there always tends to be a decline in this volatility following this news and a subsequent rise in the overall crypto market, at least so far in 2023, which we all can consider to be a broader term uptrend. And as for how you can take advantage of this potential opportunity in the crypto markets right now, the most obvious answer is investing in companies that deal with the crypto markets, like Coinbase, which just so happens to be the only publicly traded firm in this industry. However, although there is a great opportunity in Coinbase, and I am personally also an investor in this area, it is certainly something that has risks associated with it. Coinbase accounts for around 5% for all Bitcoin supply around the world, which amounts to around $25 billion worth. This means that although Coinbase has a diversified revenue stream, there is still risk that they don't diversify enough and that their sole way of making money is through trading transactions, which isn't guaranteed to provide good results if the price of Bitcoin goes up. It could mean that adding new assets isn't a guaranteed way of generating trading fee revenue for the company, and that would certainly hold back any sort of appreciation that Coinbase stock itself could see. However, folks, just like anything in the trading or equity markets, you always have to balance the risk with the reward. And although the risk to reward was not really good in 2021, it is extremely attractive here in 2023. Not only because of the ETF catalyst as well as the halving of 2024, but also because spot volume on something like Coinbase's exchange is still sitting at near 52-week lows. This means a potential rebound in spot volume, which could directly correlate with increased revenues for Coinbase on a year-over-year basis, could result in extreme investor appreciation for this business. And as I'm sure many financial analysts are familiar, Coinbase has a good idea of how to make money when things are going extremely well, with a gross margin of 80% and operating and profit margins anywhere from 10 to 20% during the 2021 bull market. Although the company right now is losing around $1.3 billion over the last 12 months, this can dramatically reverse to the upside, especially given their layoffs as well as their focus on establishing service and subscription revenues, which are much, much higher margin. Whether this leads to Coinbase becoming a key investment thesis for the 2024 bull market is a question in and of itself that only you can answer for yourself. But as usual, folks, this is just my take on the situation. Let me know your thoughts down in the comment section below, and I'll catch you guys in the next one. Take care.